All right, guys, good afternoon. Good afternoon. Welcome aboard to the live market recap for the week. Wanted to create this to do an offset of the newsletter, which is done every week. So just a quick reminder, no newsletter this week. We're just gonna do a video this time. I know I have some of my Discord guys that like to watch this as well on their own time. So we're gonna go ahead and recap the week. I went ahead and sent out all the breakdown of the week and everything like that, to what we did and what we didn't do. Let's go ahead and go over the day. Dow futures. One more piece. Podcast is back. Can you believe I haven't done a podcast in over a year? And the reason I didn't do over a year is that because I was doing the YouTube every day. And then we added the newsletter and all that good stuff. But the YouTube was pretty much like a podcast in a way every single morning. But hearing some of your guys' suggestions, a lot of you people have been asking about the podcast, and I think we're gonna do it. I think I'm gonna start it over again, or just continue it. If you want to follow us, it's GAR Capital on Spotify, GAR Capital on Apple Podcasts, and on the Anchor app. Anchor, like a boat anchor. Anchor.fm is the website. That's what I use to create the podcast. It's free, so if anyone in the future ever wants to make a really cool podcast, that's what I found. Big shout out to Gary V. He had a YouTube video on it, and the Anchor app is pretty cool. Been using it for a while, but again, I haven't done a podcast in a while, in over a year. So I'm going to do it this time with Nick. He's going to be the first timer. He usually does the market recaps for our team on Discord every night to kind of recap some of the action that we had and the future and everything like that. So again, the team always has their hands either way in what we do. It's a team effort, as always, and not just me. So I want to give a big shout out to all the guys that you don't see every day because they're working just as hard as me talking to you on camera every single day. Dow Jones closed up 129 points today. The NASDAQ fell 0.58%, and the S&P did bounce off a key level of support. We'll go ahead and go over that. Down 0.28%, but was down nearly more than 1% throughout the lows of the session. The volatility index closed slightly above 20, is now at 0.74 down today. Taking a look at equal weight S&P, down 0.21%, fared slightly better than the regular SPY. IWM small caps did gain today 0.28% at 193.13. The dollar index did hit red towards the tail end of the session, end of the day green, 103.88, off the highs today of 104.66. We'll chart that as well. 10-year treasury yields did dip. We had as highs around 3.94%, 3.828% was the closing yield. Obviously, we know that will affect mortgage rates. TLT bond ETF 102.38 currently. High yield credit up 0.39%, 74.56. So some risk taking out there. 107.04 on the LQD. This is the investment grade ETF, up 0.39%. Crude oil was down more than 3% today, but did bounce and settled 76.51 is current price, down 2.83%, and gasoline futures down 2.61%, up $2.61 a barrel, but down 1%. Excuse me. And gold futures were basically flat at 18.51 an ounce. Bitcoin futures hovering around 25,000. Again, remember we talked about that weekly death cross on Bitcoin futures on the morning notes before. Again, watching that 25,000 level very, very carefully. I think that once you break 25,000, that really pushes the risk on narrative, even with an elevated dollar. So, say what you want about Bitcoin. Bitcoin ain't going away. Ethereum down up 1.69% at 17.16, at least on the futures contract. So let's go over today and some of the action. We'll start with S&P 500 futures. And again, here on the daily, you could see that I put a couple of arrows to show you guys that support right around 40.57. And again, we did wick below that support. So understand, like always, support is not just a hard board. It's kind of like a mattress you can sink into a little bit. But again, I was kind of watching that. I wanted to see if we would break below that today. And we didn't. We had a little bit of an OPEX closing up of puts possibly. Options expiry day, you get some volatility towards the tail end, right around 2:30 to around close. And again, you could see that with a shooting star daily candle. But again, still end of the day red. Usually a pretty bullish candle. So even with this close, let's say if we close it right here, Again, the last time we had a shooting star candle this way, it was a green shooting star candle on the daily, and we had a nice bounce on the next day. Speaking about the next week and ahead, we don't have a market open on Monday. The stock market is closed. So again, we will see on Sunday with the futures opening, because this is going to be just an American holiday, President's Day. It's not global. So futures will still open, Globex will, but they'll close early around 1 p.m. on Monday to roll over for the next day, which would be Monday at 6 p.m. Eastern Standard Time. So again, if you're trading futures, just keep in mind it's a little different when it comes to holidays. But again, the daily candle still matters. Again, nice bounce off support. So again, has anything really changed today? Not really in terms of the narrative. I mean, we already talked about seasonality this morning on the morning note about how we're going to get a little weaker towards the tail end, at least seasonally speaking, in February. So again, weakness is to be expected. The question is, how weak can we go? How low can we go? So again, watching this key level of support, let's call it 40.60, 40.55. If we break below it, then I'm watching that 50-day moving average around 39.94, 4,000. That's 400 SPY. Not a bad place to take a look at it, especially if we're expecting some weakness towards the tail end of the month. And again, March and April being kind of bullish months, especially seasonally speaking in a presidential year. And again, I expect the bulls to defend that 4,000 level rather strongly. So again, really a big level of support, at least on the S&P 500 futures, is 200-day moving average, 39.51. I don't think we get there unless we have some big catalysts. We don't have much, at least in terms of economic data. It's going to be a little bit of a dead space for the next 2 weeks. I just want to prepare you guys, again, seasonally speaking, especially on a short week, don't expect a lot of volume either. We don't have a lot of catalysts coming up towards the end of the month. So again, we've had a great month so far, great start to 2023. There's no need to give anything back out there if not needed. So again, don't trade because you're bored, trade because you see a good setup. Always remember that. In terms of what we did today, so let's go over what we did today, guys. We went ahead and shorted AMD, and we bought the AMD. Let me go ahead and take a look at the actual signal. We took that today for 30%, which was smart. We took the February 24 expiry 75 puts. And the reason we did that is because we actually broke the 200-day moving average. And then you also have this gap to fill here around 75.22. So again, we saw that this morning. We jumped on top of it. We did not do 0 DTE. That's not how we roll. We did the 75 puts for next week expiry. We filled at 80 cents. They're trading at 59 cents. So again, we got out at the right time. I want you guys to just get that quick hit, 30%, right? And again, if you didn't close, fine. But again, look at that volume, 10,000 in volume. I think the market makers, traders, were looking at this gap fill. So again, it doesn't mean that we won't get it next week. Obviously, I'll be watching that. If anything, I'm looking for that level there as kind of a pivot point. Why? Because now you also have another gap to fill to the low side and another one to the other side, which is right around 64 and right around 70. So, maybe this sell-off gets a little ahead of itself, and then towards the tail end of February, we get a little bit of a meltdown. Maybe we get to 3,900 S&P or something like that. AMD has some gaps to fill. And keep in mind, semiconductors are very high beta, very growth-oriented. I pretty much will expect that if rates continue to go higher, at least in the short term, semiconductors will take a hit. So AMD is definitely on the watch list that you want to keep an eye for continuation downside. But again, 75 may be the most that we'll get, at least for the next week or so. So again, if we fill that gap on 75, great. Maybe we get an opportunity where, we see that we break 75 and then we can start taking a look at the 70 put. So this gives us a nice little setup here for some retracements. I don't expect us to get to 70, but I think 75 is definitely in the cards, and we'll probably fill that gap as we start getting to seasonally weaker periods in the S&P, AMD being a nice chunk of the S&P now because of their weight in terms of semiconductors. So that's really all we did today. I also have some Apple calls. This is basically what happened, and this is what happens, guys. You got to understand with trading. This is the only loser I have right now on the board, technically speaking. And right here is when we had the announcement of two things. One of the Fed governors said that they wanted to raise 50 basis points at the last meeting, and he's okay with sending another 50 basis points moving forward, or for the next meeting. Fine, very hawkish statement. This is not even a Fed voter, by the way. I went ahead, I think, I'm trying to remember who was the one who said it, and I tweeted about it. I want to make sure I got the Fed governor right before I say who it was or assume. It was Fed Governor Bullard, and I believe he's from St. Louis. He's a St. Louis governor, but he is not a voter in 2023. So how the Fed governors work is that they are rotated in and out. I believe there's 18 total, and I think 9 are the ones that vote. So again, every other year they rotate or so. So this gentleman, Fed Governor Bullard, was talking about that 50 basis points. That was yesterday. And again, we had a dip in the market. We saw that. Apple was actually green. We were actually green on this trade, and then it came back down. We retested the 200 moving average on the hourly. Let's go and take a look at the daily to kind of give us a little more context, because this is expiring next week. So we did buy some time at least. It is down, don't get me wrong, it's ugly. It's down like about 80%. But again, we have a gap to fill 153.48. Now this gives us a little bit of options here, right? No pun intended. Gives us a little flexibility. So again, if we fill that gap to the upside, maybe we get a pop going into Tuesday, possibly. We can at least salvage some premium. Maybe we just get a 50% loss. That's fine. Or if not, we get some bullish momentum. Maybe we get some headlines. Who knows? But again, the key here in terms of momentum for Apple, as long as you stay above the 20-day moving average. How important is that 20-day? Because if you look at the hourly chart to trade your options, the 20-day moving average, the 20-day 1-hour candle chart is what we use. So again, you want to use the 20-day moving average as your momentum indicator. So again, Apple still has an upward gap right around 153.48. I expect that to be filled. If we have a continuation in terms of momentum to the upside, I will keep an eye on those calls. But for right now, they are down. We did not close them, but that right now is the only thing on the board. Other than that, we're just holding we're just watching the market as we go. No need to add further risk just because we took AMD this morning, so well done. I do have a runner going, so again, watching that very, very closely. But you can see here on Apple, again, the nice daily candle. The daily candle wasn't awful, to be completely honest. So again, it was a lot worse earlier. We did have a gap down, but again, as long as you stay above the 20, I think we should be okay. If not, then we may just have to eat this one, guys, because headlines and Bullard kind of hit us. Apple was talking about laying off some contractors. That came out from the New York Post. That's headline risk. That happens, guys, all the time. And unfortunately, that's kind of the price of admission for the market. To answer your question here, JJ. Hey, Carlos, just want to thank you for having your team reach out to me for a special deal on your monthly subscription. Thanks. Hey, you're welcome, man. Thank you. From big shout out to our friends in Canada. Appreciate you as always. Let's go over the week real quick in terms of how we did. As you can see, we did hit Boeing. Oh, I need my glasses. Boeing. We hit the 225 calls. We also hit Tesla, Palantir, DraftKings, and AMD. DraftKings was the second biggest winner in terms of aggregate in return. The runners hit as high as 260. We saw what happened. It hit above 22. It closed at 2054. We have the 18 call. I took the runner. We had the 18 calls for next week. So again, they're deep in the money. So awesome on that one on DraftKings. Palantir, 9.5 calls. They fell today. But again, we got a runner as high as 464. I did not catch 464. I wish I did. But again, well done if you guys held. But again, like I do with everything in terms of the spreadsheet, I always put that note there from now on that runners are at the discretion of the trader. Again, everyone trades their own way. And I think people need to understand, again, this is just signals of what we are doing. And again, yes, every single trade that is out there, I trade it myself. I even put a screenshot on Robinhood. Why do you use Robinhood, Carlos? Because you can't demo on Robinhood. If you use Thinkorswim, anyone can just use a demo account, just so you know. So again, that's not something we do. That's something we advocate or condone. Of course not. People do whatever they want. And demo accounts are fine to just practice. But Robinhood, you can't fake the funk. It's right there. And again, we post that for a reason. So again, every single trade that is signaled out there, unless specified, maybe I'm on vacation or something. Again, the screenshots are all there on our Discord. You could see it here. Again, right here, this was DraftKings. Oh, here you go. DraftKings right here, about 260%. This one was AMD, 30% where we closed. So again, all the screenshots are there for the team. It's very important. I want you guys to see transparency. It's super important. Here's where we are for the month of February. It's a little smaller, but again, it is there for the Discord members. Again, I had to use an Excel and screenshot, but there you go. That's the deal. That's where we are. Right. Again, we know you aren't faking it, Carlos, even if you were faking your position. I mean, the most important thing is that it's information. Again, what you do with this information is key. And I had some people ask me, like, oh, why don't you put, how much the amount return would be? Again, we're not your fund manager either. You have to be in control of you. But the information, what you do with it, we're just giving you the fishing pole. We're telling you where to fish. We're giving you the bait, and you got to go fish. Now, again, if we tell you, hey, this place is biting, and you fish here and you catch a fish, there you go. Awesome. But again, as long as it works for you, that's what the signal service is about. And again, it's all there, the blog and all that good stuff. But again, the most important thing is the information, and information is worthless unless you use it to your advantage. So again, we could talk till today, till tomorrow about the market and everything like that, yields and dollar. But again, what you do with that information, that's what sets you up for success. So again, we're doing our best to make sure that you guys know things that maybe not many people do know about the market. But again, it's important for you guys to learn, so you don't have to worry about what we're thinking, because now you already have that thought process moving forward. Thank you, Maximo, for the kind words, and appreciate you guys as always. And listen, I don't want you guys to get it twisted. Trading is hard. 2022 was not easy. Very choppy, downward action. Again, we traded puts, traded calls. We did it all. We do the best we could, obviously. But again, it's new year, so we want to start fresh. We want to make sure that we have the right focus. And again, the explanations are the key as always. Just because you're just throwing trades on the screen, that's not gonna get it. That's not gonna get it done. We need to go ahead and make sure that you guys understand why we are trading, what we are trading, what are the targets, and what are the expectations. So you're not just blindsided by what is this. Basic just gets the signals. But again, if you're a premium masterclass, you get the explained chart, you get explained on why we have it, why we're holding it, and a video every night explaining what's next and what we're doing with this trade. What more do you need? Basically, trade coaching right there. Let's go ahead and take a look at Forex Factory for the week of next week. Let's go here to next week. Let's go ahead and move this over. All right, we got Flash Services PMI on Tuesday at 9:45 a.m. Market is closed on Monday. We got FOMC meeting minutes on Wednesday. I'm sure we're already going to have some people talking about, or at least some of the governors saying they wanted to raise 50 basis points. What else is new? We heard that yesterday. Preliminary GDP on Thursday. Again, this is a flash GDP. The expectation is 2.9% quarter over quarter. Pretty strong. Core PCE, this is the inflationary data that the Fed looks at. This accounts into rents. Month over month expectation is 0.4%, which is higher than the previous reading. So the expectation is a little hotter inflation, as we saw with PPI and CPI meeting expectations, but still relatively hot on a year over year basis. New home sales will be reported at 10 a.m. on Friday the 24th. So again, not a whole lot to really hang your hat on. Remember, we've had earnings, FOMC, CPI, PPI, you name it, we've had it. Now the gauntlet is over. Don't expect a lot of action moving forward. I don't want you guys trying to get super excited about trading 0 DTE options or finding something to trade just because. This is where right now, if you don't see it, you need to be very, very stingy with your money. You need to be making sure you're holding chips for the next opportunity. So let's just say, for example, we don't have many trades next week or any. That means there's just nothing out there. And that's okay to say. It's okay to just wait. It's okay to just see what's out there. Again, not every opportunity is out there is worth your capital. You need to make sure you keep that in mind. Not every opportunity out there is worth your capital. You worked hard for your money. Make sure that that opportunity for you is going to make money for you. High probability, at least. JJ saying, how are the signals sent? Are they still using Telegram or Discord? There is no Telegram. We've never used Telegram. We used to use GroupMe, old school. And we used to use Twitter, and then Twitter had outages. This is back in 2018, 2017, and 2016. Now we use Discord. Discord is great. Haven't had much issues on it. But again, we have a lot of great channels on there breaking down, premium options, basic signals, futures trades, Forex, masterclass only trades, investment club alerts, live market blog with me and Nick, pre-market plans with Laura and Kevin, watches and charts with me and Nick, trade flow setups, breakout activity. That's all automated through the Trading Flow platform. They license that out for us. You just have to pay for it. We do that for you. Earnings calendar, the GAR Twitter feed. I'm always on Twitter. The YouTube channel, this link will be on there. And we have GAR Trading Radio, which we haven't done lately since most people haven't really asked for it, which is okay. And then we have the macro fundamentals channel that I haven't really spoken much on. Then we have our chats for different individuals, basic market signal members, market chat for premium, masterclass, and we have a futures chat and a Forex chat. My eyes have been focused completely on options because I know for a fact that's what everyone's mind's on, which is all good. But that's how it goes, JJ. So again, pretty much I want to bottle this up by saying, guys, we really don't know what to expect moving forward. What I can say is that, again, seasonally speaking, we are expecting weakness towards the tail end of the month. And again, not a lot of news. I expect a lot of chop. I don't expect much to be moved or traded. Again, this is it since 1950. Look at the 17th. Get a little bit of a pop sideways, and then 18th, probably another leg down, 19th, another leg down. And again, it doesn't mean the world's going to end. All it means is that we're going to expect some seasonal weakness. This may be an opportunity to buy some stocks possibly. But again, we'll wait as we go. Every day is a new day. Apparently things change every day because the Fed speakers just want to go ahead and state their position on what they think about the market, even though they have no idea what's going to happen with the economy. Because you could see that Instagram post that I posted where I can literally read you verbatim what this gentleman said. This is Fed governor. Here we go. I thought I had it here. If I can find it. Let's see. Here we go. This is Fed Governor Bowman. Your guess is as good as mine as to what happens next in the economy. That's a direct quote, verbatim. These are individuals that we're supposed to trust what they have to say in terms of the economy. The Fed's working with lag data. Now, again, you want to place your faith in them, be my guest. But at least the way I see it, I think they got it wrong. But that's just me, and I'm going to trade it that way. And again, but price action dictates all. I know the fundamentals aren't the best, at least to certain perspectives in terms of valuations. But again, price action tells us all. We're going to trade it as we see it, not what we think was going to happen. We're going to trade what we know will happen. JJ, thanks for looking forward to being on your Discord. Appreciate all you do. Appreciate you, man. Thanks everybody to join me today. I'm going to go ahead and start the podcast. If you want to watch this video later, again, this will be available on the YouTube channel. Great week this week, Discord traders. Appreciate you guys. Have a nice drink and enjoy yourselves. Enjoy the long weekend. We're going to enjoy this podcast, me and Nick. It should be a fun one. It's going to be a lot more loose than the morning note, just a heads up. So it's going to be a lot of fun. We're going to talk about the Fed. We're going to talk about the economy. We're going to probably look at a couple of stocks. It'd be one of those podcasts that you want to play while you're at your laptop or on your phone or on your computer so you can kind of look at things with us. Super fun. We'll go ahead and talk to you then. Have a great rest of your weekend, and I will see you guys Tuesday morning for the morning note. Cheers.